Form 8082, Notice of Inconsistent Treatment or Administrative Adjustment Request. This is a tax form that's generally used by investors or partners that are reporting information that's different from what their partnership reported to them to the IRS. So generally, partners, S corporation shareholders, estate and domestic trust beneficiaries, foreign trust owners and beneficiaries, REMIC, residual interest holders, TMPs, which are tax matter partners, and PRs, basically partner representatives. So not too many circumstances in which you'll be using this tax form, but if they are, they're going to fall into one of two categories. Either inconsistent treatment, basically reporting information that appears to be inconsistent with what was reported to them or what they know to be true, or an administrative adjustment request. Depending on the partnership and depending on the tax years, there are several different options for the AAR route. But generally, after December 31st, 2017, most partnerships are going to go the route of the BBA AAR. So that's the Bipartisan Budget Act. That's the tax law that changed some of these reporting procedures. Prior to 2018, they would be subject to what was known as TEFRA, the Tax Equity and Fiscal Responsibility Act of 1982, otherwise known as TEFRA. So when you see that reference, a TEFRA partnership, different acronyms with TEFRA, like TEFRA proceedings, non-TEFRA partnership, that's a reference to the tax law that used to be in place before the BBA was passed that took effect in 2018. So there are three parts to this tax form. Basically, in part one, the general information, we are providing information about the notice itself and about the entity that is reporting the either inconsistent treatment or requesting that administrative adjustment. In part two, goes into the description of that item itself or multiple items. That's why there are 4 lines here, because there may be more than one different either inconsistently reported item or AAR item to be reported on this tax form. And then part 3, which we will not go into in much depth, is the explanations, basically the written narrative that the taxpayer can use to provide the IRS their rationale of either why the reporting was inconsistent and why or why they're requesting the AAR, or if for some reason either of those leads to an imputed underpayment, then they can discuss what that possible underpayment was. Basically saying that this inconsistency reported or directly resulted into an underpayment of tax owed because of a change in tax liability. So we'll cover the first 2 parts, and then based on statements and facts to be known to be true in your case, that's what part 3 is for, is to provide that written narrative. So in part 1, before we begin that, we're going to enter the name and identifying number of the taxpayer. So we're going to use this on behalf of John Doe, who is a partner in Doe Enterprises. Okay, so if we're reporting inconsistent treatment, then we would go to line 2. We would go through this. So let's go through this as if we're reporting inconsistent treatment. Then we'll go back as if we're processing this under the AAR guidelines. So notice of inconsistent treatment. Then we'll go to line 2. we'll say that that Doe Enterprises is an S corporation and their EIN is not identical to John Doe's. The IRS Service Center, generally this information, all of this information should be what you would find on your Form K1 or whatever the form that was reported to you. So it could be a K1, it could be IRS Form 8986, which is basically a push-out election of partnership items, Schedule Q, or a foreign trust statement. So whatever that document is probably going to have much of this information in it, generally speaking. So we'll just say that again, going by whatever is reported to you, if your tax return went to a different IRS center, then use that. So we'll just assume, for simplicity's sake, calendar year, fiscal years. So we'll do this as if we were reporting for the 2021 tax year. All right, so now we're done with part one. We're going to go into part two. So there's not a whole lot in this video that we can demonstrate, but what I would say is based on the inconsistent or AAR item, and depending on the entity that's reporting that item, you may do certain things differently. So the form instructions have different scenarios based on TEFRA partnerships and ELPs filing an AAR. So those that probably will not apply because those procedures were repealed for tax years 2018 and later, but the IRS instructions still have a reference to ELPs. A TEFRA partner that's reporting an AAR or filing an AAR, a partner that's filing a notice of inconsistent treatment for a K1 that was received from a TEFRA partnership, BBA partnerships that are filing an AAR, a partner that's filing a notice of inconsistent treatment received from a BBA partnership, again, Bipartisan Budget Act. Pass-through partner filing a notice of inconsistent treatment for a Form 8986 received from a BBA partnership, filing an AAR. Again, the tax form 8986 is a push-out statement. So basically, in a push-out statement, the partnership is pushing out all of the adjustments to individual taxpayers or the partners themselves so that they're reporting a prorated amount of adjustment to that income item, in accordance with their ownership in their partnership stake. So if you're a 10% partner and there was an item that needed $100,000 adjustment, then you would have to make a $10,000 adjustment accordingly. So, and then finally, other than pass-through partner that's filing an inconsistent treatment, a notice of inconsistent treatment. So depending on those circumstances, you might take different steps. But generally, the guidance for lines 8, 9, 10, and 11, they're all the same in that in column A, you're going to provide a written description of the inconsistent item or the AAR request. So if you're changing the amount that was reported on Schedule K, line 1, you would enter Schedule K, line 1, right? So we'll use that as an example. And then in column B, if you're filing an AAR, you would check the amount of item if you're changing the amount from what was previously reported. So again, if there was a $100,000 adjustment, then this would be the item that you check in terms of the amount of item. If you're checking inconsistent treatment, then you would select the treatment of the item because you believe that the amount of this item wasn't properly reported, or the item wasn't properly reported in terms of its tax treatment. So if it was a long-term capital loss that the partner categorized as an ordinary loss, then you might report that, right? So you would say this should be a long-term capital loss, not reported as a capital or ordinary loss. Then column C, D, and E have to do with the dollar amount. So we'll say that the original amount was from my Schedule K was $10,000. I think it should be $5,000. And then the difference would be $5,000. Okay. So, and then for part 3, you would put in your written narrative as to why you believe it was not properly reported. If there's an imputed underpayment, which means basically the reporting puts you in a position where you have to pay more tax than you thought you would have, then you need to also plan to provide a step-by-step walkthrough in how you determined the underpayment. So specifically, the form instructions refer to what's called an imputed underpayment, and you would need to show how that calculation was, how the modifications were applied to your formula, and there are step-by-step instructions in the form instructions on calculating the imputed underpayment. So you would need to group it into either a reallocation, a credit, a creditable expenditure, or a residual grouping, and then you would need to subgroup that within that to determine which adjustment would need to be subgrouped. Then you would need to net adjustments together. So positive adjustments against other positives only if they're in the same category, in the same grouping. Negatives with negatives if they're in the same grouping. There's different rules similar to netting capital losses and capital gains, right? So in the form instructions, it breaks down step by step how to group, subgroup, net, and then determine the total netted partnership adjustment. Then you would have to calculate the highest tax rate either under Section 1 or Section 11. You'll determine the sum of positive adjustments that increase this amount, and then you would figure the imputed underpayment based on those calculations. So all of that needs to be part of the written narrative. We won't go into detail about that because you can get very, very specific. So again, step-by-step instructions. Let's just pretend for a moment that we're going to go through this as an AAR. So basically, if this is probably not applicable for many taxpayers anymore, unless there are credit carry-forwards or carrybacks that might be applied. For partnership tax years beginning before January 1st, 2018, you would elect either a TEFRA AAR or an ELP or a REMIC. If those don't make sense to you, then you'll probably be going to the BBA AAR. There are different rules for partnership items and the tax treatment of those under the BBA rules. So then from there, if you answer this question, the BBA rules, then you need to answer questions A through D, or A through E. Is the partnership revoking the immediately preceding partnership representative. So are we changing out representatives? Because if so, you would need to attach IRS Form 8979 that basically makes that change. So we'll say no. Do the adjustments on the AAR result in an imputed underpayment for the reviewed year? So if you click yes, then you have to answer question C, which is whether or not the partnership is electing under Internal Revenue Code 6227 B2 to have those adjustments taken into account by the reviewed year partners. So if yes, then you would go to question D. If no, then you would go to question E. So basically, question E is saying, is the partnership modifying or applying modifications to the imputed underpayment? And if so, you would attach IRS Form 8980. So we're going to proceed as if this does not result in an imputed underpayment. We go to question D, which is the partnership is required to provide statements to be reviewed or to the reviewed year partners containing their share of the adjustments. And by signing this, the partnership representative declares under penalties of perjury that all statements have been provided as required by the IRS instructions. So then the partnership representative name would sign this. So for more information on this, you can go to our website, teachmepersonalfinance.com, type in IRS Form 8082, and you'll see basically a complete breakdown of this tax form, and we go into depth about much of this stuff right in here. So if you want to learn a little bit more about this, please check out our article. And if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, please put them in the comment section. Thank you very much and have a great day.